Hello there, welcome to this week's edition of Money Matters, because after all, money does matter. So the question of 2021 on everybody's lips, will the housing market crash? So let's dig into this a little bit. Are we going to go into, never mind a recession, are we going to hit a depression? We're already in recession. Any climbing out of that recession will be a bit artificial because it talks about quarter-on-quarter decline. Well, because we've had such awful quarters, it won't take much to push us out of a technical recession. But does that mean we're going to anywhere back to the economic activity levels that we were before March 2020? I think that's a while away yet. And many people are saying, well, we're going to have huge rises in unemployment. Will interest rates go up? What's this going to do to the property market? This, for me, will be my fourth recession that I've been through. The first recession that I went through was in the early 1980s. I was only 18 at the time, but the reason I was so alert to what was going on in the economy was when I was 18 years old, I bought my first flat. And all my friends, even my family, were like, you're mad. The mortgage interest rate was 15%. Well, it didn't matter to me a huge amount because my mortgage was relatively small. I'd actually saved up a good amount of that money the previous year by working my backside off, so I had a huge deposit and a relatively small loan. But the property market did not crash. So I bought that first flat, 269A Roman Road in East Ham in London. I paid £9,000 for it. I did it up, spent a few pounds on it, and it tripled in value in just 2 years. And then the 80s were off. So most of the 80s was a huge housing boom. The next recession, the early 1990s, because you had this comedy double act called John Major and Norman Lamont, and they actually joined us up to this European currency snake. It was called the ERM, the exchange rate mechanism, and it was kind of an experimental forerunner to the euro. Now, interestingly, in both of those recessions, unemployment went to double digit, okay, so more than 10%. In this recession, 2021, let's say, even the most pessimistic of forecasts only see unemployment of 7.5%. And where are current interest rates? Just hold that in your head. Because what actually causes a fall in house prices is a lack of affordability. People can't get the mortgages. People always want houses. So the two things that could stop people from increasing the price of houses is the cost of acquiring the house. The mortgage rate becomes enormously high, or there's a load of people unemployed that have got, really good salaries and everything. And so those two things could cause the housing market to crash, but I'll come back to both of those things very shortly. The question is, fundamentally, how different or similar are the scenarios now? I mean, if we look, for instance, at recent events, Boohoo's been buying up chains and whatever, so I'm not saying this is good or bad, I'm just saying this is a fact. Disproportionately, the industries that are impacted in this recession, shop floor workers, hospitality workers, waiters, chefs, people that work behind the bar, all these sorts of people. Typically, they're relatively young, and typically they're on relatively low wages compared to average salaries and indeed senior salaries. What we're not going to see, I don't believe, is 7.5% unemployment across the spectrum. What we're going to see, sadly, is disproportionately much higher unemployment for people in their late teens and early 20s and that sort of thing. But they wouldn't have been buying houses anyway. So the professionals, the more established people in their career, they're not going to get made unemployed, probably, because their industries are relatively secure compared to the ones that have been really battered about by coronavirus. And top of the list is obviously travel and hospitality. And notoriously, that's where the youngest people work on the least amount of money. Where are interest rates going next? Well, people that are smarter than me, the money market specialists, the people that buy sterling forwards, are predicting in Q2 2021, the Bank of England will send interest rates negative. But surely, Paul, mortgages will never go to a negative interest rate. What? You could get paid for borrowing money? No, that could never happen. Denmark, Jyske Bank. Apologies, my Danish friends, if I just pronounced that wrong. Negative interest rates, minus 0.5%. So what do you think is going to happen to the price of property in the UK if interest rates go down further? They're already incredibly low. I just bought a villa in the south of France and I've fixed that interest rate for the next 20 years. And I'm paying 2.2% interest on that money. Is it possible that sometime in the next 20 years they might go above 2%? Well, yes. So I thought, well, okay, fix. I've seen interest rates much higher, and I've still bought property. So it's kind of an annual thing. House prices are going to crash, because this expert says is a very cheap way to fill column inches in a newspaper and get readers, because everybody's fascinated by what's happening with, property price. So that's my view on interest rates. Okay, in order to keep pace with the growth in population, the UK needed to build 200,000 new homes a year. And consistently, for like 20 years, we didn't do it. All the clever people sat down in the House of Cleverness in Westminster, and they came up with a new plan. What they said is, we're woefully short of the targets that we set ourselves, so what we're going to do is increase the targets. So it's like, yeah, okay, whatever. So instead of a target of 200,000, they set a target of 300,000. Now, we'd never been anywhere near 200,000, and they didn't actually do anything to get us nearer to 200,000. What they just did is increase the target. So if you plug into your clever machine some different clever statistics, then suddenly the clever answer becomes, we're fine. So they can then wave the bit of paper around, go and tell the public that actually they fixed the problem, when they haven't done a sodding thing. What happened to the number of completions, the number of houses built as a result of this increase in target? I'll tell you. We are still building 140, 150,000 houses a year, just like we've done pretty much for the last 25 years. It's like tomatoes, light bulbs, cameras, watches, anything. If there isn't enough of them, the price goes up. In order for the price not to go up, there needs to be an oversupply. There is absolutely zero evidence there's going to be an oversupply of properties. There's an undersupply of properties, a chronic undersupply. And for the politicians out there that might be watching this, don't know if you've spotted this, but we are an island with quite a lot of people on it. So they're not building any more land, as someone once famously said. So we have to make do with the resources that we've got. And there's this continued strangulation of red tape and absolute nonsense that stops people building and refurbishing and changing houses. So let's look at the next element that's going to contribute to our housing. Is housing going to crash or not? Demand. The ONS, the Office for National Statistics, projected back in 2017, 2018, that by 2029, population of the UK will be 70 million. And that's a combination of increase in the birth rate and guess what? During coronavirus, everyone's locked down, got nothing else to do. What's that done at the birth rate? It's pushed it up quite a lot. So there's even more little Brits on the way than there would have been previously. And British overseas nationals. And I think this is a good thing. You're a British overseas national, so you're British, you just can't come to Britain. What they're allowed to do now is, since the end of January 2021, new permission was given for all of those British overseas nationals that are living in Hong Kong to come to the UK. The most recent suggestion or projection that I've seen is over the next 2 years, we can expect 1 million British overseas nationals to arrive from Hong Kong. So what do you think that's going to do to house prices? It's going to go up. Another 1 million people arriving over the next 24 months. That's a serious accommodation pressure, isn't it? We're all living longer. Sadly, more and more people are getting divorced, which means more and more single households. But every single demographic and social measure I can see means not only is the demand for housing going up, but it's going up at a faster rate. And the final crushing blow for all those people that think there's going to be a collapse in house prices is this. COVID and lockdown have changed the kind of properties that we want. Super premium rents in London have dropped by anything up to 30%, roughly a third. Because people don't want to live in little rabbit boxes in the sky, studio flats with no garden during lockdown. So city centre, small studio flats with no balconies, and even 1 and 2 bedroom flats with no balconies and all that sort of stuff, and especially if there isn't a park nearby or something, their value has gone down. What has gone up instead is 3 and 4 bedroom houses with gardens, especially where there's enough space to work from home, a home office. 25% of the UK's workforce now work from home. So there's been a shift in the type of property that people want to buy. So the devil is always in the detail. We've got 2 properties that we're doing at the moment, both at the sort of £250,000 mark. Well, that's what they will be worth when they're finished. The rent on both of them, one's about £1,100, the other one's about £1,200. And let's say on your £250,000 property, you've put a £200,000 mortgage. And let's say that you're paying 3% of £200,000 is £6,000. Divided by 12, you can see why I did this now, can't you? It's 500 quid a month. So if you've got £1,200 a month rent and £500 a month for your mortgage, yes, you've got to pay for some letting fees and whatever else, even if the property halved in value. You'd still be making £300-400 a month profit. Ask yourself this question: what if the pundits are wrong again? In 2020, lockdown, COVID, property prices are going to fall. And they didn't. They went up, according to Rightmove, by 6.6%. And in fact, in Yorkshire, where I'm investing, property prices went up by 8.8%. So on a £200,000 house, if I had not bought property because of what the papers and all the doom mongers were saying, I'd have just cost myself best part of 18 grand per house. And I've got quite a few of them. And that's not on rent. That's on the capital appreciation. I do not think the property markets are going to smash, crash and burn. I think there's a change in the way that buyers want to occupy property. Smaller, especially studio flats with no balconies, as I've said before, yep, in city centres, they will fall in price. Inevitably, because people just physically don't want to live there. They're scared. They don't want to be close to loads of other people. And the opposite is true of more rural properties, larger properties. So is the property market overall going to go up? Yes. Will we see some parts of the UK with some kinds of property go down? Yes. That's my view. Anything else you want to know, can you just put it in the box below? What I'm going to do in the blurb below this video is I'm going to put some stuff about our 2-day Wealth Through Property course. Now, if you like what you've been listening to, if you're still awake, because I know not everybody, this isn't everybody's cup of tea. If you want 2 whole days of this stuff with me and the team, come and meet the Touchstone family. I'd love to see you there. Click on that link, book yourself a ticket. It's all online, it's all socially distanced and very, very safe. Hope to see you at one of those events real soon. You be wonderful. I've been Paul. See you next time.